The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, if you looked at the grains and oilseeds on Thursday at the close, some pretty good support. Soybeans, soybean meal, corn, quiet in the wheat trade. But the opposite could be said for the livestock complex with at or near limit losses in cattle futures and pressure in hogs, and a tough day in the stock market as we got the government starting to reopen on Thursday. We got a WASDE report coming from USDA on Friday. It's a lot to unpack here. Let's talk about it. Joining us now, Brian Doherty, Senior Market Advisor at Total Farm Marketing. And Brian, good to catch up with you again this week. And you know, before we jump down a couple of the different rabbit holes I think we could jump down here today, you know, you made an interesting comment to me before we went on the air. And so I want to start there. Was Thursday's trade, was it simply maybe just selling livestock, buying grains potentially? I mean, you know, do we need to overcomplicate it, or just kind of had that feeling to it a bit on Thursday, Brian?
Well, and it has the feeling because that's really what happened today. The grains went up and livestock again down, and that's been the most recent trend. You look at the way beans have skyrocketed over the last few weeks, lay that over a cattle chart, they're exact opposites. So is it what's behind that? Well, that certainly could be money type flow activity, okay, or money flow activity. Big traders, long cattle, run stops under the market. It gets the trip, they get kicked out. Some of them may have had some good gains made. They look at things like grains, downtrend forever, starting to break support. Resistance levels and moving at things like that, and that triggers buy orders. When you look at it, but take one step even further back, high priced something versus low price something. At some point, somebody's going to buy the low and someone's going to sell the high for whatever reason. So it may be just that simple. But when you get in the weeds, you know, the question is really what's driving soybeans, because there will be plenty of people, and I read plenty of people yesterday that are scratching their head going, well, basis is widening in Brazil and price is cheaper and the U.S. can't compete. And yet here we are, almost 30-40 cents higher from the low earlier in the week, in that 30-40 cent range. So somebody is buying. The question is why? And is it big money just buying still the idea that beans, if carry out drops closer to 200 million, are undervalued, anything under less than $12? Is it the idea that cattle just at some point demand diminishes at 240 and 250, and maybe it picks back up here at 210 or 220 or 200, but even with tight supply? Those are the questions. Big report tomorrow. We'll get a first glimpse at a USG report in a couple of months. The WASDE report. I thought on Monday or Tuesday, I said, let's talk Thursday to my customers and I'll have more feel for the market. Jess, I have no feel for what this report's going to say tomorrow, what adjustments they can and will make with the government open one day. And there's going to be a data dump, it looks like, on export sales tomorrow as well. So all of these sales that we haven't seen will likely show up tomorrow as well.
Well, and you bring up a good point here. We're talking about, you know, export sales. I know USDA's also kind of rolled out a bit of a schedule on top of a data dump here of how they're going to catch things up with all these export sales, and it's something that it's a question I've been kicking around a fair amount this week with folks such as yourself and others. Is, you know, how is this flood of data going to impact these markets and the unknowns, to your point with the WASDE, the wide range of estimates, and how is this all going to look? And I think best way I could sum it up is buckle up for volatility, Brian.
Buckle up for volatility. So if you're a student of the markets, that's what you need to do. Put that seatbelt on, buckle up, expect almost anything. And that can happen any day, but tomorrow will be heightened because there will be a lot more knowns tomorrow. And then there's going to be a lot of second guessing after tomorrow. Well, what about the next report? And what's January really going to say? So there is going to be certainly some things there, but the volatility will be there. Now, for a farmer, this has probably been a little more than they hoped for in the corn and beans. And percentage changes, it's telling me farmers should be trickling some sales into this and rewarding this. The last thing you want to see is a good punch higher, like we've got in beans, followed by an even faster punch lower. And not a lot of people probably remember this. Maybe many do, but I just think back 2 years ago in June, corn was under $5, and within about a week or less, maybe a little more than a week, went over $6, and then went back under $5 in less than 10 days. So it was a really dramatic up and down. And unless you were in the right place at the right time, or just rewarded the rally, and I think just rewarding the rally is something that's front and center right now.
And I think along with that, I'll be the devil's advocate here a little bit too. Some folks, like to say, well, I don't, whatever the USDA says or whatever, I don't care. I want to look at the spreads and the charts and what those fundamentals are telling us. And so, I think some people are maybe saying, okay, whatever the numbers are, they are, then let's see how the charts, the spread action, things like that continue to kind of trade around here, especially as we get into next week. I think there's some folks who like to lean on that more than whatever these numbers are going to tell us, Brian.
Well, and there's so many things you can look at. That's an important point, and one I'll agree with you in this regard. So one of the spreads I've been kind of monitoring, two of them in corn, is December corn versus July corn. So how are those futures moving? And so if I know the front month is losing ground or gaining ground against July, it tells us how rapidly farmers are selling, or the belief that supply is either bigger or smaller. And so it just at a quick glance here, when I look at the July December spread, that particular spread is trading at minus 27, July under December 27. That spread was at 37 in August. So all this harvest pressure, and yet you're seeing December pick up against July. Tells me the crop isn't as big as the market was anticipating in August. Use a spread that probably trades between years. Right now, minus 17 cents. That is March futures, under 17 for December of next year. That spread was about 32 under. That's picked up about 15 cents, old crop to new crop. So from a spread perspective, certainly things that need to be observed. That spread is going from what I call negative to less negative. Some would call that narrowing. Some call it widening, depending on where it is in the 0 point relative to each other. But nonetheless, just know that the old crop contracts are picking up a new crop, and the front months are picking up on the back months. Tells me we've got a tightening supply, lack of farmers selling, or both.
Well,
or good demand. Yeah.
Yeah, or that's the thing too. Yeah, good demand, and I think a lot of this is going to take us a little time to flesh this out. I've heard a little more chatter as well about farmers looking at maybe some new crop here. These 26 corns right around that 475 mark on futures. Nove 26 beans are kind of 1120. I'm hearing some folks who like to dip their toe in the water a little early. They're starting to look at some of that for next year, Brian.
Here's just one person's opinion. It's my opinion. The first 25 to 35% of your expected production, I think you sell on value. That's when it hits a price, you sell the value of that price. That no matter where prices go, you can look back and say, at that time, knowing what I knew, it made sense, right? So let's go back to last year, or this year, but let's go back 10 months. Let's go back to December of 26 corn. Breached 475, never got above 480. Okay. So those who started selling some, let's say around 475, because it was a nice number and maybe I can make some money at that. That was a really good position when corn's under $4, right? That just looks really good, feels good. It's always trying to sell, I think, the first 25, 35% on the rally. So if someone's looking at that and going, the world can really produce a lot of crop in a hurry, we got to, yes, start looking at those starting points. I'm targeting a little higher. I'd like to think $4.85 to $5 on D's corn. I'd like to be a little more strategic in how we go about that than maybe some others. Or do we pre-buy some calls or bull call spreads so that we can lay in some sales and not even second guess them? I don't care how strong the market looks. We don't second guess. We've got it covered. Things like that are really important to talk to your advisor about sooner than later. The opportunities are coming. Maybe the start of a big bull market. Maybe we have some weather in South America. Let's assume normal crop from a marketing perspective until proven otherwise.
Brian Doherty, Senior Market Advisor with Total Farm Marketing, is our guest analyst here today. Brian, on the wheat complex, as you look across things there, look at the charts, et cetera, that was the quiet leg of the grain stool on the day Thursday. But any thoughts for you in this wheat trade at all?
Well, there's scuttlebutt that maybe Russia's crop will be a little bit smaller, but I don't think if I'm going to outguess the reports tomorrow, we're going to see any changes of consequence on wheat, only because I don't think I've seen anything in the last 40 days that have suggested there should be any changes on at least the world supply. So do they tick up demand a little bit? I doubt it. Unfortunately, wheat isn't the crop right now that is leading this charge or recovery or technical buying. It's had a real nice technical bottom, a nice bullish key reversal at the bottom, things you want to see. And it's had some nice push, but it's not a leader. Maybe we get something tomorrow. Maybe we start to see, as we get more into late November, December, we start talking about maybe freeze concerns, those kind of things where something can kind of be a catalyst. But I'm really lacking the demand drivers in wheat unless something shows up tomorrow to sustain a rally. That doesn't mean I'm not friendly to wheat prices. It's just something has to come along. I'm probably the flip. I'm just not real negative to wheat prices right now. I don't see farmers selling much wheat if prices dip.
Let's talk a little bit about cattle a little more. I know we kind of alluded to it at the open of our conversation, that buy grain, sell cattle, and hog trade. Closing out the week, though, Monday, when we had that limit higher move in futures, is almost kind of looking like a fluke. We had a couple consolidation days, now a big down day Thursday. I wonder, though, too, stocks under heavy pressure. Maybe there was some of that as well, that pressure, that correlation between stocks and livestock on the day Thursday, Brian?
Maybe, right? Because stocks went into new highs yesterday, and the cattle didn't follow either. So, but there's all of that, right? So meats in particular, cattle. We've talked about this ad nauseum all. Let's say summer, fall, where the market just kept going up, and we just go, well, maybe the consumers out there that buying beef, they don't care, they can afford it. Maybe that mentality still exists, but it's rare to see any market move, let's say, an extended uptrend without a correction. So the bullish traders are going to argue, look, you guys are thinking that it's all wrong. I mean, today's a down day, right? Maybe cash will be softer by the end of the week. But big picture, you look at something like, the February contract starts this rally in the 180, 185, goes up nearly to 250. And so when you look for corrections or setbacks, this is what you look for. And they're going to say, look, we expected this. Usually a cub probably comes in more toward October. It didn't this year, but this is where you start buying again into the market play. I'm going to go into that camp. We're not making any more cattle. We said that when cattle prices were high. We're not producing any more cattle in the short term. We need to see the subtle changes that could be impactful are how much beef do we actually import from an Argentina or Brazil. Maybe this down day today has a little bit more to do with talk of prices coming down or tariffs coming down or adjustments coming down. On today was coffee and bananas, no mention of cattle or beef from Brazil. And at some point the border opens, and at some point these calves come in from Mexico, and at some point consumers back away and they pay taxes and they buy Christmas presents and whatever. But I don't see a big change. I think the market's got to find its equilibrium. Probably 250 is too high, maybe 200 is too low. The new norm is probably 215 to 230 until we in earnest see signs that we're building the herd. It seemed like the consumer for multiple months was able to afford beef above 210 and above 210 to 220, 25.
Any notes for you across the dairy markets this week, Brian?
That is a market that continues to just struggle with too much supply. Again, if you read the dairy publications and look at the analysts, there's this continuous, thank goodness for dairy on beef and this revenue stream. There's a point there where the thank goodness just puts too much product on the market. So you're creating more calves because you need more cows, or you're holding cows back. And that's really the problem in the milk market and pushing into new lows this week. I felt pretty good that the market may have found its lows, but we saw front ones hit new lows this week, and the general sentiment stays generally the same. We're into November. Let's call it the Christmas buying should in theory almost be behind the market right now. So where do we go from here is the point. Tough to be negative on prices here, because I think if you look at inflation, cost of production, all these things that someone will say, well, those don't matter. Well, in the long run, they do matter. And that milk prices coming down, product prices coming down, that's value to the consumer. Demand should hold in there. I just don't know if we've quite hit that bottom yet, not after this week's trade.
Good perspective as always. Final thoughts? Anything else you would mention or reiterate to folks here on the show today?
I think just, again, we coined the phrase marketing never takes a day off, and just look at, if you're a feed buyer, look at things changed in the last 2 months. If you're a grain producer, things have changed positively for you in the last 2 months. If you're a dairy producer, things have been defensive. If you're a cattle producer, things, making any sales was a mistake until it's not a mistake because you can't sell enough. So keep that pencil sharp. Keep looking at the right tool, right time. You and I talked about this ad nauseum as well. Keep buying puts in the cattle market. When it tips over, it could be violent. Well, it's been violent. I know it's hard to buy those puts when you see them erode month after month, but when they kick in when you most need them, that's when it counts. So think of it from a marketing perspective. Think of the tools as business tools, not speculative tools.
Brian, if folks want to reach out and have a conversation with you there at Total Farm Marketing, how can they get in touch with you?
I'd appreciate a phone call, 800-334-9779.
Brian Doherty, Senior Market Advisor with Total Farm Marketing. Always good to hear from you, sir. Thanks for joining us on the show. Have a great one. We'll talk to you again next week.
Jesse, my pleasure, and thank you for the opportunity, and happy Thanksgiving. If you don't happen to catch us next week, happy Thanksgiving. I'm not sure what our schedule is for next week, but or that's 2 weeks from now. I'm ahead of myself. All right. We'll see you next week.
We'll see you next week. Brian Doherty with Total Farm Marketing joining us here today on Market Talk.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.